Welcome back to Pest Control Unlocked. I'm your host, Konstantin Schwartz. Today we're doing a full deep dive on one company, Anticimex. They've just published their 2025 annual report. Let's walk through the report and establish what it tells us, not in financial jargon, but in plain language about what this company is actually doing, where they're going, and what their playbook looks like on the ground here in North America. As a precursor, the Anticimex report has currencies in Swedish krona. I've taken the liberty to use an average US dollar exchange rate for 2025 to convert the values into US dollars to get a better gauge for their business. If you're anywhere in the US pest control market, whether you're running a branch, leading a sales team, or just trying to understand who's building what in your backyard, this one is worth your time. Let's get to know Anticimex a bit better. Anticimex is a Swedish pest control company founded in 1934. They've been in business over 90 years. Today, they operate in 22 countries with more than 12,000 employees and over 260 branches worldwide. Their single biggest market is not Sweden. It's the United States. Nearly 4 in every $10 they earn globally comes from American customers. The US is almost twice the size of their home Swedish market. But what makes them genuinely interesting isn't their size, it's their belief about where the industry is heading. Their entire strategy is built on one idea: moving pest control from reactive to preventative, to stop responding to problems that have already happened and to start detecting them before they develop. The tool they've built to do so is called SMART, their own platform of connected sensors, cameras, and electronic monitoring devices that watch for pest activity continuously around the clock. Right now, 13% of their contracted customer base is using this technology. 601,000 devices are installed globally. That sounds like a lot, and it is, but it also means that 87% of their customers are still on traditional service agreements. The gap between where they are and where they want to be is the engine driving almost every major decision this company makes. Let's look at the 2025 performance picture without drowning in numbers. The headline is that Anticimex brought in just under 1.75 billion US dollars in revenue last year. And for every $100 their branches generated from pest control, about $21 were left over after paying for all their people, products, vehicles, and overheads. That's a well-run service operation, and that margin actually improved slightly versus 2024. Around 77% of their revenue comes from ongoing contracts, not one-off jobs. That recurring income base is what gives them the stability to plan, invest, and keep acquiring. Now, there's one thing in the numbers that looks odd until you understand it. Despite running a profitable operation, they recorded a net loss of about $30 million for the year. The explanation is straightforward. Anticimex is owned by EQT, a large private equity firm. Private equity acquisitions are typically funded with significant borrowed money, and that borrowing carries an interest bill. In 2025, Anticimex paid approximately $217 million in interest. That's more than the cash the business generated from operations in the year. The interest bill is what creates the bottom line loss, not the business performance itself. To address that situation, all their existing loans were replaced in 2025 with new ones on better terms, lower interest rates, longer repayment timelines. Think of it like refinancing a mortgage at a better rate. The short-term cost was a one-time fee write-off, but going forward, the interest burden is reduced. The pest control business is healthy, the financing structure is expensive. Those are the two separate stories. Now let's look at North America. In 2025, the single most significant strategic move Anticimex made in North America was entering Texas through 3 acquisitions in the Dallas-Fort Worth market: Safe Haven Pest Control in Garland, Abby's Pest and Termite Services in Claiborne, MetroGuard Termite and Pest Control in Hearst. 3 established DFW operators, all acquired within the same year. The CEO of Anticimex called it a strategic milestone in their annual report. Not a routine transaction, a milestone. And since year-end, 5 of the 7 additional acquisitions they've completed globally have been in the United States. The pace is accelerating. Now, how do they actually integrate these businesses? This is where the Anticimex approach gets interesting, especially for an operations audience, because they do something a lot of roll-up operators get wrong. They don't always rebrand. When Anticimex acquires a local pest control business, the local name often stays. Safe Haven stays Safe Haven. MetroGuard stays MetroGuard. Why? Because in a market where the Anticimex name means nothing to a homeowner in Garland, Texas, the local brand is the asset. It carries years of built reputation, familiar trucks, reviews from neighbors, and technician relationships built over years of roots. Stripping that away on day one of an acquisition is how you lose customers before you've even started. What they use instead is an endorsed brand model. The local name leads, Anticimex sits behind it. Their annual report gives us more examples. Turner Pest Control in Florida, where the head of Smart carries the title Turner Pest Control and Anticimex Company. The local brand leads the customer relationship. Anticimex provides the technology and operational backbone. Another example, slightly outside the annual report itself, is American Pest in Washington, D.C. and Maryland markets, which operates as American Pest, an Anticimex company. Same principle, established regional brand, Anticimex infrastructure behind it, and they manage over 40 local brands globally. That's not a failure to integrate, it's the whole point. It's how you acquire 30 businesses in a year and still hold customer retention above 89%. Let me talk about Smart not as a technology story, but as a sales and operations story, because that's where it becomes relevant to this audience. Just as a reminder, 13% of Anticimex's contracted customers are currently on Smart-enabled agreements. 87% are not. From a pure growth perspective, that's a massive conversion opportunity sitting inside their existing customer base before a single new customer is acquired. Here's the commercial case. When a customer moves from a standard contract to a smart contract, the value of the service goes up. They're getting continuous monitoring, not just scheduled visits. The relationship gets stickier. You have hardware on their premises. The service becomes more efficient to deliver. Technicians go when there's a real reason, not just because the calendar says so. For commercial accounts specifically, food manufacturers, hospitality groups, healthcare facilities, distribution centers, there's an additional layer. Regulators and auditors increasingly want documented evidence that pest risk is managed actively, not just we visit monthly, a data trail showing what was monitored, when, and what was found. Smart makes that possible, but the conversion isn't automatic. It's a sales process and operations process together. Technicians need to be trained, customers need to be resold on the value, account managers need to understand how to position it. Anticimex is executing on not just installing devices, but building the internal capability and customer confidence to make the technology stick. For anyone in this industry thinking about their own service model, the smart conversion challenge Anticimex is working through is a version of the same question every operator is going to face. How do you move customers from a time-based service model to a condition-based one? There's no shortcut. It's a combination of the right technology, the right training, and the right conversation with each customer. Let me close with 3 things worth watching. Anticimex in 2025 is a company that knows exactly what it wants to build. The North American strategy is clear. The technology platform is real and growing. The acquisition machine is running, the brand retention philosophy is sensible, customer retention is strong, and the operating performance, 21 cents of profit from every revenue dollar, is solid. The challenges are equally real. The interest burden from the private equity structure limits how much they can reinvest. Organic growth slowed slightly versus 2024. And converting 87% of their customer base onto smart technology is a multi-year operational challenge with no quick fix. 3 things to watch going forward. How fast does the Texas footprint expand? The 3 DFW acquisitions are a beachhead. Houston, Austin, San Antonio are the next logical moves. The pace of those announcements will tell you how aggressively they are pushing. Does smart conversion accelerate? The 13% figure is where they are today. If that number starts moving meaningfully toward 20-25%, it signals the conversion engine is working. If it stalls, that's the operational story to watch. Does technician retention hold? 30 acquisitions a year means a lot of people going through ownership changes. The decentralized model and brand retention philosophy are designed to protect against attrition, but execution matters. Technician retention is a customer retention. They're the same thing. This is a company building a version of this industry's future in real time. The 2025 annual report shows the foundations are solid. North America is where the next chapter gets written. That's the Anticimex 2025 Deep Dive. My name is Konstantin Schwartz, and this is Pest Control Unlocked. Thank you very much for listening.